Hello traders, this is traderdee from Elliott Wave Riches, where I use Elliott Wave and technical analysis to analyze stocks and ETFs for upside and downside breakouts. These are trading ideas, not recommendations. I try to do my best to include teaching points and make Elliott Wave analysis as easy and fun as possible. We try to stick with stock options and derivatives for fast returns, but you could trade the actual stock as well. If you're not comfortable with options, stay away from them. Okay, so with that being said, let's proceed. Okay, so first stock we're looking at is Celgene here. Okay, let's see what kind of count we can get out of this. Okay, and already I see an ending diagonal here for the fifth wave, so I know that's the end of the 5-wave count. Okay, so why don't we start marking this? Okay, so we'll mark this ending diagonal as such. Okay, and let's see, we have a leading diagonal here. Look at that. Okay, and let's see if we can pull a wave count out of here using our wave count analysis. Let's see, 1, 2, 3, this is A, B, C, 4, and then 5. Very nice count. Okay, so you find the top, look for a bottom, and swing it all the way through. Now, a lot of stocks rallied April 15th, so I know that's a start date, and then we have October 16th. Those are two very important dates for inflection points for the S&P 500. So I already know this is most likely correct, and we can even look at a fib tool here. Let's see if we can get a fib retracement tool and mark this and see how low we can go here. Let's see what we got. Okay, very good. Okay, so this is an interpolation method just to see if our fibs line up. Usually a third wave will go to 0.5 or 0.618 when doing interpolation. When doing extrapolation, we'll see the third wave go to 1.618 of the first wave. But when doing interpolation, it's a good way to see if your wave count is right. It's just to see where these waves are going. Okay, and the fourth wave will go to 0.236 or 0.382. All right, so this wave count looks like it's correct. So now what are we looking for after this? So we're looking for an A drop, a B return. It could be a broken flat, it could be a zigzag. So we could have an A, could have a B if it's a zigzag, and a C. Okay, so let's see what we got here. Let's look at this even better. Okay, also keep in mind, not to go too quickly, that this is A, this is B, this is C, just to give you a better an idea of what these corrections are. Let me just label them. Should be A, B, C, and let's see if we can change this to a minor. Okay, and if you see here from wave 2 to wave 3, this third wave should be 5 waves in itself. Every impulse is 5 waves, every correction is A, B, C, 3 waves. So here we have a nice 5-wave count. 1, 2, 3, 4, 5. Okay, so this is the 5th wave of the third wave. This in itself is another 5 waves. So you have to really look at a lot of wave counts to be able to pick these things up. But the ending diagonal is a dead giveaway. And the ending diagonal, as you know or don't know, leading diagonals and ending diagonals in itself are impulses. And we have 1, 2, 3, 4, 5. If you see here, it looks like this third wave of this ending diagonal, 5th wave, is actually an ending diagonal in itself. This is very interesting. So this top out pattern here is actually an ending diagonal in itself. So let's see if we can Let me just change that so you can see what I'm talking about here. Okay, so that in itself is an ending diagonal. So I got 1, 2, 3, 4, 5. Now, the first, third, and fifth waves of any diagonal are usually impulses. They can be three-wave structures, but they're usually five-wave structures in itself. But the second and fourth waves of an ending diagonal are always three-wave structures. Okay, so now let's see where this is going to go, so we can place an idea for a trade here. Okay, so now this looks like a three-wave A wave. Now A waves can be three waves or five waves, B waves are three waves, and C waves are always five waves down. So this looks like we're going to have an A, a B, and a C, giving you a W wave, or you can call it an A wave just to make it easy, but the W wave is nothing more than an A, a B, and a C. Okay, so that's how that works. Now, how is this A, B, and C? Well, let's see. Let's see if we can go to a 15-minute here to give us a better idea what's going on. Okay, so now we are on a 30-minute to give us some good visualization here. Now we're going to attempt, remember this is the end of the ending diagonal here. Okay, this is 5. And now we're going to break down the correction waves. Okay, this is where it's all about, the correction waves. Okay, so we have A, B, and C. Okay. How do I know that's A? How do I know that's B? How do I know that's C? Well, again, I see another leading diagonal here. So this is A of B, this is B of B, and this is C. So we'll label this again. Okay. Okay, now why don't we change this? Put a minute here. Okay, so see that? And let me change the color so I don't confuse anybody here. Okay. So A, B, C, and the B wave breaks down into three waves. And the first wave of that third wave is A here, and then B is three waves again. And then C is five waves, and this is a five wave. This is 1, 2, 3, 4, 5. Okay. If you want, I can even label that for you. Okay, so we got 1, 2, 3, 4, 5. Okay. Why don't we make this minute wave here? Okay, so just switch it up. 1, 2, 3, 4, 5. Now, the hierarchy of the lettering is not really important. It just looks more professional when you do it, but usually CPR. That's how to remember it. So everything in circles is a higher order than something in parentheses, which is a higher order than something in regular letters. And this labeling tool actually has all the orders here in the format. Just in case you forget, you got primary, intermediate, minor, minute, minuet, subminuet, micro, submicro, minuscule. So that's just a labeling convention. It doesn't matter as long as you know which wave has a hierarchy to the other. It just looks better when you label it right. It makes you look like you know what you're doing. Okay, so we have A, B, C, and we're going to call this W. Why don't we call this W? A, B, C is called W because the A, B, C's sometimes repeat. And we're going to label this W here like that. Now after W, we're going to have an X, and that looks like it's going to be A, B, C. So it looks like we're going to have an X wave. Now the X wave can go all the way back up to here, up to where 5 was. And then we can have a WX and then a Y to drop. So why don't we start labeling the rest of this? Okay, so just so you can see the whole picture. Okay, we're going to go zoom back out just to give you an idea what everything is looking like. And then it ends up getting sloppy, so. Okay, alright, so 1, 2, 3, 4, 5. And now we have A, B, C, W. Now we're going to have A, B, C, X. Then we're probably going to have A, B, C, Y. Okay? And I say probably because from here, we can just go impulsive. We did 1, 2, 3, 4, 5. We can have a small drop and go 1, 2, 3, 4, 5 again. But the W wave drop, the ABC drop, usually comes down, usually doesn't even come down to a fib level. The one that comes down to a fib level is the whole WXY. Okay? And the WXY is a double combination. So just not to make it complicated, all right? We still just want to make money off this. Let's not make this too complicated, all right? So now we have, let me take off this fib so I don't crowd the chart here. Okay, remove that. Okay, so now we are on the next part. We've just labeled the first down move for a successful W. Now we're going to try to figure out how we can get an X wave out of this, because that's what we're looking for, is an X wave. That's the assumption, is that an X wave, because it didn't come down low enough. Okay, it should be coming down lower for a correction from that full 5-wave move. All right, let me just backtrack. Okay, let's look at the daily again. Let's see how low this should actually come down to. Okay, if this celgene is correcting, or any stock is correcting, from here we should come down to about the top of the third or the bottom of the fourth. That's where I've seen it come. Usually you see the texts will tell you you should come down to 382. Okay. Okay, and the text will tell you it will come down to the 4th wave, but I have seen it come to the 3rd wave. Okay, so what we can do, let's look at our fib tool to explain that relationship again, just to check our work. Okay, fib retracement. Okay, now if you notice, when going from bottom to top, we're going to put the 0 here and the 100 here. And a lot of people get confused with the fib levels, which one's 100, which one's, where do you put the 100, where do you put the 0. If we're looking at a bearish stance, bearish momentum, we're going to want this to be 0 and this to be 100, okay? So let's see where we're going to put this. Let's see, okay, here we go. Okay, so W wave came down to like 0.382, the X wave, we're going to have to look at an X wave relationship in relation to the W wave. But we're going to do that in a second. But just to see where WX, how low the Y wave should come, if there is in fact a Y wave, we're going to see it's going to come to 0.5, 0.618, or 0.786. Okay, so these are usually targets, these three. Okay, there's nothing set in stone with this stuff. If you look at the Elliott rules and the guidelines will tell you 0.618. Okay, so just want to get that out of the way because some people get confused about the fib relationships. All right, but now we're going to look at the fib relationship of. We're going to focus on the X wave. We're not going to start shorting this thing, assuming it's going to come down here, because it may not even happen. We take it wave by wave, okay? All right, the easy money to be made when playing these Elliott waves is to go long for the 3rd, or go long for the 5th, okay? After a correction, after a 3-wave correction, you get a 5-wave move. You got 1, 2, 3, 4, 5 for the first wave of the 5th wave ending diagonal, 2nd wave, 3rd wave, 4th wave, 5th wave. So the easy money is made here, easy money is made here, and you know after seeing this leading diagonal that after this drop you're going to get an impulse wave after this 2nd wave retracement. So this is where the easy money, it gets harder to make money as the wave progresses. And when you get to the point that the impulse is over, you want to stay on the short side, because this is when you should buy the dips. On the left side of the Elliott wave cycle is when you should buy the dips, because it dipped here because you know it's going up because it's impulsing. You buy it here, you know it's going up because it's impulsing. Now, anything you buy on the right side, the corrective side of the Elliott cycle, is a risk. You could buy here and make money. You wait 107 to 117, $10 move with the options. We know what kind of money we're talking about, even with the stock. But you have to be careful buying on the corrective side, because corrections are full of traps, bull traps. So people go long here. You went long here. You made a little money here. You got stopped out. You go long here. You make a little money. You hold on to it. You may get stopped out again with that Y wave. Okay. So now we're gonna look at, when we proceed, and look at how high the X wave should come up in relation to this W wave drop. Okay. So now we're gonna go up to our fib again, and we're gonna, okay, let me put the fib here again. All right. Okay, very good. So we went from 0 to 100 with a W wave. Now the X wave, you see, one of the targets, and I don't think this X wave is over, already hit a fib level, so our next fib level is 120. Okay, so that is a possible target. And like I said, going long during the corrective wave is not for the faint-hearted. This is just a quick scalp in and out. Okay, and we want to make sure that this is something we're not going to regret. All right, so we're going to check out our wave pattern just to confirm that the X wave is in fact still happening. Okay, so let's see what we got here. Move this here. Okay, and why don't we start labeling this? Okay, based on conjecture here. Okay, let's say A, B. Okay, now let's see if C's here. Now, is this correct? Is this possible? Now, this is A, this is B. C wave should finish the X wave, right? Okay, so let's see if we can label this. Okay, 1 second here. Okay, so let's see. We got 1, 2, 3, 4. Now, is this 5? This may not be 5. 5, if this is a C wave, is up here. So this would be 1, 2, 3, 4. Now, this could be 1, 2, 3, A, B, C. 1, 2, 3, 4, 5, A, B, C, W, X, and then a Y. So this could be a complicated fourth wave move here. 1, 2, 3, 4, and then this wave can be extended. 1, 2, 3, 4, 1, 2, 3, 4, 5. Okay, now the fact that this broke here, upwards trend line, it bothers me. And these are things you're gonna run into when doing analysis. This is where the rubber hits the road here. Okay, and let me just see another trend line. Okay, here, this is where we have to implement classical technical analysis here. Okay, and this is very, very interesting, because this broke here and it doesn't look like it's coming back in, not yet anyway, and I don't think it will. So the fact that the W wave ended here and it took this line out means we're in the X wave. That's how you know when one wave stopped and no one ended. You just look at the trend line. So this is something where we cannot go long or short. We have to wait, and we have to see if we break. We got to see if we break out of this. Okay. And of course, the line should always be parallel. Very, very interesting. Okay, so this is a new wave tunnel forming, and we're going to see if we break this line. If we break this, we go long, and we can go from right now it's a 114.46. We can hit a 120 target potentially. So it's definitely something we're going to watch. And then after that, ABC. After the X wave here, we should get a nice drop. So, all right, I'm a little bit happier with this wave count here. This looks like the first wave was a lean diagonal, second wave, and the third wave was an any diagonal. I didn't really like that other wave count. It looks like we're still waiting on a fourth wave drop, which should come to support here, and then we should take out this trend line. So that's what we're going to look for. And hopefully get a couple of dollars out of this. And of course, the ideal spot to go long would have been for the X wave, but that's all right. If you get in late, you can still catch a piece of the impulse as long as you can ride it high to the next fib for a target. And then we look to see what happens after that. Okay, take it one wave at a time. All right, Elliott Wave Riches. All right, D Trader. Sign it out. Thanks. God bless. Bye now.